Good day, traders. Stacey Burke from Stacey Burke Trading. Today, just reviewing the previous week's 1 hour charts on the currency markets, payrolls, non farm payrolls week, and just again reviewing breakouts and the three types of breakouts. We have breakouts that will break out, accumulate more orders, and then continue. They will break out, they will reverse, retest, and fail, which we call the false breaks, or the marginal new highs, marginal new lows, and then the breakouts that will break out, retest, and fail, and go into a trading range. I mentioned this in the other videos. Essentially, that is really all markets do. They are always trying to break out, as Al Brooks says. They're always trying to break out in one direction or the other, and eventually they will succeed and accumulate more order flow as other orders cover their positions and also enter into new ones. So just reviewing the British pound. Again, Monday is the red line on these charts. It's 20 period moving average. That to me is, I look for that. I use that with squeeze plays and just an visual indication of bias, and I look for certain setups off of the moving average with that. But Monday on the British pound, straight off, even if we just draw the high of Friday, as the market, again, I usually wait until the Asia close, Europe open, which is the 8-hour candle. This is New York Eastern Standard Time charts. But again, this is a classic pattern, this rectangular pattern. This is the type of patterns that I look for. These, I call that a double top. I know there'll be traders that would disagree with that. I don't really care. I'm looking for that M-type top pattern off of new highs or new lows in a W pattern. These are fantastic, especially when they happen at the Europe Open or London Open. Now you can see, and Peter Brandt talks about this often, 8 to 12 candles in setup and duration. He likes weekly charts, but there's usually a pattern within a pattern. So if we see a rectangle like this setting up, and then also we see a micro trend line. Now again, I don't tend to trade off of trend lines unless they're horizontals, but this is just a good again support, giving you a couple points to back up your hypothesis that on the London Open this market did break out. It retested, accumulated more orders. You could have went to a shorter time frame if you wanted, but this is a classic M top or double top type pattern, and again that market then continued down. But the key thing in this situation is actually the time of day. So again, Asia close. If we went back and we went bar by bar, the first two candles are our pre-market. Second two candles, we've got Asia. So basically the range was established already early into the session. The market traded sideways and then in London broke out. So it gave, again, traders, the key with this is understanding that you're looking for opportunities that give you either a reproducible range to project a profit target to, and in this particular case that continued to trend down into Tuesday, but also you want to be able to identify one area of where the trade would be wrong. And I've said this, I have one on my hourly charts, I have one candle stop. So, on average, it's about 30 to 35 pips. The Mexican peso is a bit more, it's around 50. But the importance of this is just understanding that I want to be able to define my risk and also have a measurable reward that's greater than the amount that I'm risking. So ideally, I'd like to see 3 to 1. Sometimes these trades start to struggle around, double the distance, and then you've got to be more alert at where these trades may fail or start to reverse, and that again, that could be going into the New York Open. So Tuesday again, the next thing that I do, we've got a breakout level from Monday now, so I can project that across until it's traded through or whatever else. But then I will take the low of Monday, and something traders you start. The reason why I do that is if you go to a daily chart, what we want to know is that there's going to be breakout traders that trade the breaks of these highs and these lows on daily time frames. So again, we've got our pre-market, our Asia market. The range was pretty much established prior to the London Open. We see the London Open came in down here. So we've already had a breakout when we come to look at this. And then when I see this sort of pattern, that's nothing that even is tradable to me in terms of how I trade. So I left this alone. The following day, we would just do the same thing. We've got our levels now. We've got a breakout level, and we've got our previous day's low. And you can see that one of the great things about this is that it keeps you out of trades until you have a clear reason that this trade may either be building up some energy to again move or impulse. But essentially, you don't want to be trading anywhere in here, and Dalton talks about this in Market Profile. You don't want to be participating on the middle part of that profile unless now you're coming off of that point of control and resuming a trend. So this is just going to keep you out of chop. So again, we go into Thursday's session. We mark off Wednesday's high. And again, you can see that the market respected that level. This is a pretty simple thing. Like, people have emailed me and messaged me and said, what about this? Or, I disagree or whatever. All I'm doing is looking at previous daily highs and daily lows on the hourly charts, or points in between that would have given us evidence of a breakout. So for example, right here, we can see there was a breakout. I'm going to project that across. And lo and behold, you can see that the market stayed in that range until Friday, when again we see a evidence of the market coming off into the US session. It's formed a low, early Asia, and then reversed and broke out in London. So again, an evidence of a breakout trade where more orders were accumulated, and then that continued on through payrolls. So, could there have been opportunities earlier on? Absolutely, and there certainly may have been. I'm just specifically looking at support and resistance from the previous day's highs and lows. Traders could have certainly got in on the London Open. There was a small reversal breakout from the Asia close, Europe Open. So again, but the most important part of that is that we still would identify one of those candles as our extreme to where we would want to manage our downside. So again, payrolls finally gave a move on the Friday, but virtually for the pound, to me, there was nothing crystal clear other than Monday's trade. Maybe Tuesday morning if you traded that earlier on. I don't tend to come to the screen until that Asia close time frame. So let's take a look at the Japanese yen. So again, if we look at Friday and just mark off Friday's low, which is what I would have done on Friday or Monday, sorry. And again, early Asia, we've got a little bit of a high and then a low, so I would mark that off. And again, not your textbook double top or double bottom, anything like that. We do have a range that's established, and then late towards the London close, that market did break out. That's not tradable for me. I'm in bed sleeping at that time. So again, we go to the next day. We have Monday's low, and we have a continuation pattern forming, and it did indeed break out into the Asia Open. And then as Asia opened and Asia closed and London opened, we start to now be suspicious. Obviously, there's going to be at some point some kind of retest. When, we don't know. But we can see that the market did break lower at the U.S. right before the U.S. Open. So on this reversal, traders at the U.S. Open were able to position themselves. And again, the point of this is that what I'm trying to establish is that we have one bar. But also, if you just pay a bit more closer attention, you can see that there's a high and a low where there's now a rectangular pattern. So we've got 3 points that we can identify as our rectangle. We've got a large reversal of a fairly strong bear candle on the U.S. Open. And so traders, at any point when you participate in the market, it's 50-50. And Mark Douglas talks about this because we understand that anything is possible on any of these trades. It's imperative that you always manage your downside. So you need to have your stops in place. You need to have exposure that reflects, an amount of capital that's obviously going to give you a benefit from being in the trade on a profit, but also not destroy your account if you're wrong and you take a loss on that trade. So again, just to talk about measured ranges, you can see where that original breakout was from the open to the London Open, Europe Open. And if we project that upwards and project that range expansions, again, we can see that the market hit that target. So it's important just to start getting in the habit of being able to identify ranges, looking at again these little rectangular points where the market may start to look at reversing. So we go to Wednesday, and again we mark off. In this particular case, we wouldn't mark this off because I don't consider that a high, because we don't see the candles going out of balance here. But what we do see is that on the Asia Open, we now have a low that's established. We can certainly mark off that Asia high, early high, and then we also have evidence here of a double bottom. But what's more important, even though these aren't equal on the bottom, we've got our little rectangle, and we've got a strong breakout candle in the third hour of the London Open. And we talk about 2 a.m. to 5 a.m. that these markets will often establish a high or a low for the session during London session. But again, more importantly, traders are able to identify a point where they can position themselves and also have a maximum risk established with that one candle. And if you're trading on shorter time frames and getting a better fill, fantastic. But just the point here being that even with that, you still want to be able to identify where the market is going to find support and resistance. And again, if we take that range and we just project it, the market did a minimum of a reproducing that move. So the market obviously reversed down after London close into the later part of the U.S. session. And again, you're probably starting to identify seeing these double tops and double bottom patterns. We've got our 3 points. So we've got 1, 2, 3. We've got our little box established. And again, we don't see a breakout of that box until the 11 o'clock candle, which is 5 a.m. New York close. 5 a.m. open, 6 a.m. close. And then again, the market just take these ranges again, project them up, and this one did a 1.5. Actually, that was a 2 times extension of that breakout from the London session. So we go into Friday, and again, we've seen the market break out back to retest that range of the U.S. close. So again, we've got a rectangle up here. You can see, and we can probably tighten that up now after the Asia Open starts trading. We now can tighten that up. But again, if you were to have participated, there's obviously an announcement on that day, but we can see there's 2 times the expansion of that range again. So payrolls, pretty messy for the yen on Friday. But again, just start looking and identifying these rectangular patterns with W's. That's a bit of a reversal, a head and shoulders reversal there. But so these are things that will just start to enhance your results, but also make sure you can identify that candle that you can lock in as your maximum amount of loss on a trade. Check out the peso, and again, I love trading the peso. It's got very good ranges. I didn't have any trades on the peso this week. If we go to the daily or even on this, you can see it was a fairly range-bound market, but I just look for, there's a couple of key things I look for in the peso, and didn't really see that this week, but still tradable. So traders, again, mark off the high and the low on Monday. As Monday started trading and gave us new highs and lows, we started to look, there's a version of a double bottom there. Not textbook, but we have a range. We got a little high there. It reproduced, that was a 50 pip range. Market came back inside. Tuesday, we see the market again break out and form a high, and then reverse just into the Asia close. And traders who were able to position themselves at the Asia close Europe Open, again, maximum 1 bar stop. But what's critical about this is that you can see we've got 2 old highs, one from Friday, one from Monday, and the market just broke strongly and cleared all of them out entirely. So it was a great move, fairly good odds in terms of risk reward. Wednesday, we see the market auction down. So if we were to draw a breakout, we've got our breakout projection from Tuesday's trade. Broke through there, continued to auction across. eventually found support from that breakout from Tuesday. And again, nothing here to me was crystal clear. I don't trade this anyways. This is the US, but this is messy to me in terms of looking for any optimal setups. So on Thursday, we see the market do a 3 thrust pattern. So we've got 1, 2, 3. If you're not familiar with that, check out Schabacher, Edwards, and McGee. But also what we have from Tuesday is a low of the high period. So where the last low where the market broke out, the highest low, the low of the high period, the market broke out from there and cleared that and traded downwards. But now we can use that as a potential area of selling as well. So we see that the market made a 3 thrust on Thursday, Wednesday's close, Thursday morning, and that 3 thrust pattern is a fantastic opportunity to look for failure. And we had again that selling area from the previous day. We got a nice version of a pin bar, not entirely textbook perfect, but again we've got that reversal bar set up on the 10 o'clock candle, which is be 4 a.m. New York close, and then boom, we get our breakout candle, and that market traded back down to test that original level that it broke out from. So again, just sticking to some support and resistance levels. This is classic on Friday with payrolls. You see the market broke out early Asia, but what that did do is it now gave us a breakout level as well as a low from the pre-market, and when it came back inside to the top of that range, once it came back inside, traders, aggressive traders that was in London Open, second hour of London Open, again can position themselves with a 1 bar maximum stop. If that was going to hold, that market should not have come back in that strong into that range. But regardless of that, traders can position themselves with a maximum 1 bar stop, knowing that there's going to be, if the trade is successful, there will be an asymmetrical reward opportunity. So support and resistance, highs and lows, traders. Pay particular attention to the Asia close, Europe Open timeframes, New York Open. These are the times when you're going to see these patterns. If you're finding a pattern or a trade setup, these are the most important times where there's going to be a higher correlation with them being, high probability, possibility setups and moves. So, support and resistance traders, breakouts. Again, just to rehash the 3 types, trade will break out, fill more orders, and continue. It will break out, retest, and fail, and usually reverse quickly to the other side, which we call a false break. And then, of course, the last one, trade breaks out, retests, and fails, and just goes into a trading range and struggles. So study these breakouts, traders. They're very helpful. And again, when you get these little rectangular patterns setting up, look for the return on those to be 2 or 3, 4 times the range that you've just broken out from. Stay disciplined, traders. Stay focused. Keep getting better, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.